Morning, everyone. It's Friday, the 14th of May. I'm Joe Neighbour from Signal Centre, talking ball all by myself today. No Steve. Enjoying another day's holiday. We'll be back on Monday. So again, going to keep it fairly brief in terms of running through the charts today. We'll do my best to get through some of the most interesting charts I think that are around at the moment, and of course run through a couple of news headlines. So let's get stuck in. So yesterday we did see a pretty decent recovery in a lot of risk assets. We were certainly in the morning yesterday concerned that the selling would actually escalate into something a little bit more sinister and nastier, but it never actually happened, and the dip buyers came back in their droves to push the markets higher. It wasn't all plain sailing, however. We did see a bit of a dip in some commodity prices. The rising inflationary pressures raised the spectre of less accommodative monetary policy, and also we saw China taking some action with regards to trying to tame raw material prices because they've been rallying so substantially in recent months. Things like copper and some of the other agricultural exports such as lumber and many others, corn, soybeans, etc. All of which did actually dip a little bit yesterday. On to sort of health and what's going on with regards to COVID. The US public health officials yesterday said that fully vaccinated Americans can ditch their masks in most settings, and that even includes being indoors or with large groups, which is a pretty big shift in guidance and hopefully sets out a bit of a roadmap for the rest of the world in overcoming COVID and going back to normal everyday life. With regards to what's going on in the Middle East, it still continues to be quite tense. Israeli forces launched a blistering assault on the Hamas-run Gaza Strip. So clearly, we've got some issues going on there. And there was potentially a threat of a second battleground with the Iran-backed Lebanese Hezbollah militants firing missiles into the Mediterranean off of Israel's north coast. So a bit of concern there. Bitcoin remains on course for a fairly lumpy weekly slump after Tesla's Elon Musk doubled down on his attack on the token's energy demands. He is concerned that raw materials like coal are being used to mine for the asset. And we've also had skeptic Bank of England Governor Andrew Bailey state that buy if you want to, but it has no intrinsic value, talking about Bitcoin specifically. So he won't be very popular amongst the cryptocurrency community this morning. Okay, onto the charts. So let's start off with dollar index today on the FX side of things. As you can see on the chart here, the daily chart we've got this corrective channel that's in place at the moment, and that's containing price action and has been since the 31st of March. So 2 days ago, we saw a really impulsive move to the upside, having found some support at this 78.6% Fibonacci level at 90.11. So around about 90. On the nose, we are finding some support and some buying interest re-emerge. Yesterday, there wasn't any follow-through action following on from the day previous. In fact, we posted a doji candle pretty much in line with the upper end of this bearish channel. So further selling today. Whether or not we are going to break out to the upside remains to be seen. Still very choppy at the moment and not really give us any clear indications on what it wants to do. But clearly the momentum overall remains bearish, but there are potentially some signs of some reversals taking shape. I've got support in at 90.36 today. So if we do see a dip back to that level, I'm kind of thinking we might see some buying interest, but it is Friday and we don't have a huge amount of data due out. We do have some retail sales and also some consumer confidence from the Michigan numbers today to keep an eye on. So over to other currencies. Obviously, euro dollar is the flip side of the dollar index, and following on from this impulsive move to the downside that we saw on the 13th with an increase in volume to the downside. Yesterday we posted a doji candle and the volume is pretty much the same as it was the day before. So a real battle going on between the bulls and the bears here at the minute. In terms of resistance today. I've got resistance coming in at 121.23. So that's where I'd potentially be thinking about entering some speculative short positions. Now, those of you that can see this chart and recognize this pattern, what I've actually drawn on is a head and shoulders top pattern. Very speculative at this point in time, as I keep reiterating, because in order to complete a head and shoulders pattern, you need to see a break below the neckline. That neckline comes in at 117.04, so it's got to do a hell of a lot of work before it actually completes that pattern. But from a risk reward perspective, I do like the potential pattern that's forming here. Although it's very speculative, from a risk reward perspective, there's potentially a lot on offer if you get the timing right on this. So I'm looking to sell at 21.23 today. In terms of a stop loss, you could place it above the highs that we posted on the 11th of May, which come in at 21.82. The safer bet for me, though, is placing it above these highs that we posted on the 25th of February. The wick of this candle that's all out by itself over here may attract some interest. So I'll be putting a stop loss above that level at 122.43. Highly speculative. If it does play out over the coming weeks and months, then there is potentially some decent reward on offer. We're looking at sort of 7.75 R on that one, but it is going to take some time to play out, and it is highly speculative at this stage because it hasn't completed. But this is where my thinking is at the moment on euro dollar. And obviously, in order to play out, we need to see some dollar strength, and in order for some dollar strength to occur, we're probably going to need to see some selling in some of the riskier assets like indices, cryptocurrencies, and some of the commodities such as the mining stocks as well. So we'll have to wait and see. Aussie dollar. Now, this is obviously a riskier asset when it comes to currencies. If it's going up, it means dollars going down, and if Aussie's going up, it tends to mean that people are quite comfortable in taking risks. Looking at this again, you could argue that it is in the process of forming a top. Again, very speculative, but we did see this impulsive move to the downside on the 12th of May, which really sort of set my thinking off that we could begin to head lower. In the last couple of days, we've actually posted a couple of doji candles, so a bit of indecision. Again, the volume was quite supportive yesterday, backing up what we saw the day before in terms of the amount of participation. So again, quite a big battle going on at the moment, maybe quite a decisive point in the market whereby we're seeing an equilibrium between buyers and sellers, and it's just a case now of seeing who wins out. I would say the momentum is probably on the side of the bulls because we've had such a big run to the upside, and they're going to want to do a lot to try and defend their positions where they are at the moment and how well this has gone. So interesting times, I think. That's pretty much all I wanted to run through really on the currency side of things. I think there's more going on elsewhere that's of interest. Let's have a quick look at Bitcoin. We're starting to get a little bit concerned that a top may be taking shape on Bitcoin. Obviously, it's done a hell of a lot, as we know, but you can see that the price action is rounding off now. This is on a daily chart. So when you start to see these sort of rounding formations, it can indicate that a top is beginning to form. It might be a bit early for us to call that, but it has done a hell of a lot, as anyone that's been involved in cryptocurrency will know. Now, I have drawn on a head and shoulders top here, potential head and shoulders top. It looked like it was going to try and bust through this neckline at 46.976 yesterday, but we posted a long-legged doji, so a massive amount of indecision. But look, there was obviously a lot of participation. The volume was a lot higher. Again, decisive moments in the market whereby we're seeing lots of participation, but with no actual change in direction there. So, a big battle going on between the bulls and the bears. Are we going to see a corrective move on a lot of these assets? I think if it is going to happen, then it could happen pretty soon. Now, with Bitcoin, if it closes below those lows that we posted yesterday, and the low came in at exactly 46,000, then we can start thinking about a corrective move to the downside. And where would we be targeting? Well, if we take a measurement from the head down to the neckline of this head and shoulders pattern and project it lower, then that actually comes in at 29,121, which will be a big jolt to cryptocurrencies and probably be felt across the board. In terms of sort of Fibonacci levels, does that marry up with anything? Let's have a quick look. So going from these lows that we posted last March to these recent highs, and drawing a Fibonacci retracement table, then this measured move target is, I guess, in the vicinity of the 61.8% fib level. So maybe that would be an area to target. A 61.8% retracement would be pretty severe. I think a normal sort of retracement would be between 38 to 50%. And I'd be quite happy in those regions to continue buying. If we did see a dip back there, it would be creating, I think, a significant amount of value for people that wanted to buy cryptocurrency for the longer term. If we saw it down to the 61.8% level, then I think you're going to start really testing some people's resolve. You're probably going to get a flush out of all the new money that's entered the market in and around this phase here. So it will be a challenging time. But again, for those that are believers in cryptocurrency for the long term, then you're going to create more value around here and therefore build up more participation for potentially another rise to the upside. So interesting. Again, go back to the point that there's a lot of participation that occurred yesterday, big spike in the volume, very big doji candle, which describes indecision in the market. So we'll have to wait and see what the next step is. On to gold. That's on a decent move higher today, certainly on an intraday basis. This is the daily chart. We continue to be contained within this bearish channel or corrective channel. Steve, my colleague, has been banging the drum on this one, believing that this is actually a continuation pattern. This is the weekly chart that I've now switched over to. So clearly the overall trend is bullish and has been really from these lows down here in 2015. So maybe what we're seeing here is a flag type pattern, which suggests continuation. If we can break above this channel, then we'd be looking for much higher prices over the medium to long term on gold. In order to do that, what needs to happen with the rest of the markets? Maybe a shift back to gold being a bit of a safe haven if we do see any froth coming off the top of these equity markets. Obviously, equity markets have been the place to be for the last 12 to 18 months. So we need to wait and see what will happen in the event of maybe a de-risking phase in some of these asset classes. Over to the equity markets. Now, I was a little bit concerned yesterday. This is our domestic market, the FTSE 100. This is the daily chart, and as you can see here, the wick of this candle breached this wedge pattern or this channel. And when I was speaking yesterday, we were actually below this. So there was reason to believe that if it had closed below that level, it would have actually led to a continuation lower in the short term. Didn't happen, and yesterday we saw the big old comeback from market participants buying any dip in the markets at the moment. So clearly, participants remain bullish enough to continue backing their convictions and believing that these markets will head higher. And that for me is a pretty powerful reversal candle. If we break below these lows, then I think we can start worrying again. But for now, there's no immediate danger. We're backing up the gains that we saw yesterday with a continuation to the upside. Okay, what else we got? German DAX. Again, this was another one that was looking a little bit dodgy yesterday. We were trying to take out these lows that we posted on the 4th of May. Again, when I was speaking yesterday, we were testing these lows, but the buyers came back in their droves and pushed it higher. A little bit of weakness today. Don't think there's anything overly worrying about that, but I would suggest that, with the ranges now starting to increase and the price not really going anywhere, since beginning of April, the price is pretty much flatlined in the DAX. If we do take out these lows at 14,827, then it could lead to a correction lower. And my first target would be this 38.2% fib level at around about 13,900. On the US markets, obviously NASDAQ has been one of the underperformers in recent weeks. We were staring down a potential break of this channel yesterday. But again, the buyers came back in, certainly not as powerfully as they have done in the European market. So a little bit of a concern there, but this bottom of this channel is holding for now. So we may see a bounce higher, although given the way the price action's been and how overinflated arguably some of these tech names are, I wouldn't be surprised if we do see another challenge of this channel in the fairly short term. And if we break that channel, then we'll be looking for moves down to this low here, which has now formed a support at 12,210. If that's taken out, then we'll be looking naturally for the 38.2% fib level at 11,228. Onto the broader index of the S&P 500 again. Yesterday, we were looking at a potential break of this wedge or this channel. Didn't occur. Buyers came back in and looking as though they're on the front foot again this morning, up by almost 0.4%. So looking pretty good on that front. I think this is now the key level to watch on the downside, 4,034. If that's breached, then we can start eyeing up a potential correction to the downside. While this level remains intact, I think there's every hope and chance that we're going to go back up to test these highs. But I would say that the range and the wedge is narrowing, so I don't know how much more there is in the upside. Just be nimble, I think, if you are going to play it to the upside, because risk can happen very quickly. And if this level starts to breach, I think there's a lot of weak hands in the market that could quickly fold if there is to be any sort of prolonged selling. Although so far, when we have seen any bout of selling, the buyers have been pretty quick to step in. Okay, that pretty much wraps up where I wanted to go with the charts. We'll get a little bit more comprehensive next week when there's two of us going through these. But what I'll also do now is go to the gun to the head trade yesterday that I posted. So I was selling euro US dollar. That was my trade of the day. Come 9 o'clock yesterday, it was 5 ticks on side, or 0.13 R. So nothing to get overly excited about. It does stop the rot after a bit of a losing streak. But hopefully I can pick another winner today. And in fact, I'm actually going to go with euro dollar yet again. Main reason for this is, as I spoke about on my chart, I think we could be in the process of forming a top. It's very speculative to call it at this moment in time, but it is pretty close to my ideal entry level, which was at 21.23. It's currently at 21.17. So in order to get this trade on now, I'm going to sell it right now at 21.17. Let's just go to the intraday levels to finesse this a little bit, get rid of those drawings. Okay, so I'm selling it here, 17 as I called. Where am I going to put my stop? Well, let's go above this high here. You see this high from the 12th? We've got a spike to the upside. I'm going to place it just a couple of ticks above that at 21.55. And on the target, well, we've got some swing lows down here, so that would be a natural level for me to target, which is at 119.86. So looking for 3.37 R today on euro dollar. If you look at the hourly chart, you can see that price is a little bit range bound. So hopefully I can get a bit of a winner on that today. Obviously, we won't know until Monday now, but this will be closing. I'll be closing this at 9 o'clock for the purpose of the challenge. Okay, in terms of what's going on later today, we've got core retail sales in the US and advanced retail sales in the US, both coming out at 1:30. We've got some Canadian manufacturing shipments and wholesale numbers due out at 1:30 as well. And at 3 o'clock, we've got the Michigan consumer confidence figure. So that's a high impact number. Keep an eye out for that before you go into the weekend. And that pretty much wraps it up for me on this Friday. Steve will be back next Monday for us to go through some charts. In the meantime, have a great weekend. Trade safe if you're getting involved today, and we'll catch you next week. All the best. Goodbye.